Hey everyone, welcome back to our YouTube channel. I'm Krish, and I'm here with
Scott Pearson.
and we're just here to talk about some end of the year financial opportunities. So thank you, Scott, for joining me. I'll just have a couple of questions.
Sure.
So it's the end of the year, and what should people start thinking about in regards to their finances?
Well, there's a few different things that we can think about. Number one, retirement planning always has something to do with year end, and so that's something we should discuss.
Okay.
But then beyond that, I think it's also worthwhile to think about giving, and we also need to think about tax loss selling.
Okay. Okay. So tax loss selling, I genuinely don't know what that is. Could you talk a little bit about that?
Certainly. So at the end of the year, at the end of a calendar year, everyone's going to be thinking about their taxes and how much tax they're going to pay on their income. Well, capital gains income, the income they've earned on their stock transactions, is one of the things you're going to pay taxes on. And how that's calculated is by the net of your profits minus your losses.
Okay.
So if you have a lot of profits, and this has been a particularly good year, so a lot of people have a lot of profits that they've taken this year, it pays to think about whether there are any losses that you can book right now and get them into this calendar year so you can take advantage of those losses. Now, you're allowed to sell something and book the loss and then buy it back in the new year as long as you've waited at least 31 days. Right? So if you otherwise it's considered a wash sale. If you sell it and then buy it back in 2 or 3 days, that's not acceptable.
I see.
But as long as you've sold it and bought it back within 31 days, you're safe, and you've gotten to take advantage of the tax loss. It will go on your taxes for this year if you do it before the end of the year, and you're ending up paying less taxes.
That sounds really good.
It's always an advantage to think about. And it doesn't mean you should sell everything that's showing a loss right now. You know, you may have some securities that just went down over the week and you know they're going to come back right away. But there very often are things in your portfolio that maybe aren't performing as well as you had thought they would. And even if you feel like they might come back, if they're not going to come back necessarily in the next 30 days, it makes more sense to take advantage of the loss now and then buy them back later.
Got it. Okay. And I also have on my notes, would you like to talk a little bit about retirement planning during this time?
Absolutely. So end of the year is usually the time when people start to realize that they need to make some plans for their retirement. Whether we're talking about somebody that works for a company or whether they are self-employed, there's different ways that you have to think about that. So if you're working for a business and you have a 401k or 403b through the business, this is really your last chance to get money in on this tax year. You've got to get all your contributions made by the end of the year. And so, you know, talk to somebody in HR if you want to up your contributions so that you can take advantage of that tax advantage before the end of the year.
I see.
On the other hand, if you're self-employed, you have a few different choices. Some people we talk to use the SEP IRA or a simple IRA. Some people just use traditional IRAs, Roth IRAs, things like that. And each of those has slightly different rules. The simple IRA is, I always tell people, not quite as simple as it sounds. And I always suggest, you know, talk to your tax planner if you're going to be going that route, because there's a lot of intricate details that you need to be thinking about there. It's probably too late to start a simple IRA this year anyway. That would be something you'd have to kick off next year. But it's not too late if you haven't set up something like this yet to do a SEP IRA. A SEP IRA, you can contribute 25% of your income, but up to this year it would be $69,000. Next year the cap is going up to $70,000, and that can be all in pre-tax money. In other words, you can get a tax advantage for contributing to your SEP IRA. So it's a particularly big tax advantage for a self-employed person who's earning a good bit of money or a smaller amount. But that you have up until, just like a traditional IRA, you have up until when you file your taxes next year. So if you're, for example, looking to contribute for 2024, with a 401k, you have to have that done by the end of the year.
Oh, okay.
For an IRA, you have until maybe March or April 15th would be, for a lot of people, their tax date. And so they can contribute up into that day when their taxes are due next year for 2014, as well as for 2015, 2024, as well as for 2025 if they want to plan ahead for next year.
Got it. Thank you for explaining that.
Now, a lot of people, a lot of self-employed people have moved over to the solo 401k, which feels a lot like a SEP IRA, but it's not. It operates under the same guidelines as the 401k, the traditional ones. And so therefore they have to get all their contributions in by the December 31st. And that's an important guideline.
Yeah. I also like you mentioned giving earlier, because I mean it is the season to give. So from the financial side, what are some ways that we can give wisely?
Well, you want to take advantage of whatever tax benefits you can get when you're giving. And I think I love to be a giver and to help those that are in need. And I think that's a valuable thing. And we have causes that we contribute to as well. But we want to do it wisely in a way that's going to take advantage of the benefits that are available. And after the tax law changes 4 or 5 years ago, not as many people get to take deductions on their contributions as they used to. But if you're able to do that, it makes sense to do your giving at this point in time and just take advantage of that within the calendar year so that you can get your tax benefit. But the other thing that I always tell people is you want to contribute instead of just contributing cash. It makes more sense to contribute appreciated securities, so stocks that have gone up in value. If, for example, I have a stock that's doubled in price and I'm thinking about selling it and then giving the money away, well, it would make more sense just to give the stock away. Because if I sell it first, I'm going to have to pay taxes on that profit. But if I just give the shares away, then I don't have any tax to pay on the profit, and the charity doesn't have any tax to pay either, because they're not going to be paying tax on it.
I see.
So it really is beneficial from that point of view.
Yeah, no, that's great. And I think that's all we had.
I think so. One last thing I'm going to mention.
Yeah.
We mentioned retirement accounts.
Yeah.
I know a lot of people sometimes have small retirement accounts that they maybe had 20 years ago at an employer and they kind of forgot about.
Yeah.
And they haven't figured out how to find them. So the law that was passed a couple of years ago required the government, the Department of Labor specifically, to put a searchable database in place by December 29th of this year to help people locate those. Now, you have the ability, you can file a Form 5500 with the IRS to find them anyway.
Yeah.
But that's, I think, for a lot of people kind of more difficult. So if the government gets this database up and running as they were charged with doing by the end of the year, that would be a very simple way for people to go out and just locate their lost retirement accounts and then bring that money back in. The very simple thing is just to roll it over into their current retirement account or roll it over into an IRA. And that would really be a benefit for everybody.
Yeah, there you go. So if you lost your retirement account, this is a way in which you might be able to get it back. All right. Well, thank you, Scott, for answering my questions. And
thank you.
We will see you guys next time.